All right, I'm just going to jump on here real quick and break down a setup that I had um in my market update for today. This is going to be on the USD JPY as well as the GBP JPY. I'll start with USD JPY because that's what we're on. So I had this local model identified, and that is what I was pre-planning for. I patiently waited for the break of structure here. This was valid on the 3-minute. You can see here 2 consecutive bearish candles and then 2 consecutive bullish. We obviously swept. Yeah, we made a third tap, so we made a model 1, a local model 1, which is what it's exactly what I was pre-planning for. Tap 1, 2, and 3. But nevertheless, we SFP this break of structure countless times, and eventually it was just a very weak break of structure, and I could see price was just holding back. There was also demand below, so I did not enter. Now, if we zoom out a little bit, we have actually made the Model 1. Apologies if I said Model 3 earlier. So yeah, this was supposed to be a local model. We were aiming for a local Model 1, tap 1, 2, and 3. We never got that. Very weak break of structure. I did not enter. But in turn, this actually created the Model 1 for this higher time frame model. So this is now our main goal. So I'm going to move this to the side. This is still valid for now. Now that is no longer of interest to me. This is no longer of interest to me. This local range is no longer of interest to me. And I am simply looking for a break of structure because we have created a Model 1 distribution here. A clean Model 1 distribution. Very clean. Like, when this looks like this, guys, this is chef's kiss. Moving down exceptionally well. Now, I just want to have a look because there was never any sort of market structure here that price could break using the 2 candles. So we're still looking for a break of structure here. This is our market structure low. Now what I need to double check is what the highest time frame that this market structure low is valid on. So we're going to label this market structure low. I'm going to put my alerts. And I will be going into the context of this shortly, but I'm just doing this because we're in a live market situation at the moment. All right, so I would be looking for a break of structure on not on the 30-minute. Why not on the 30-minute? Because we only have 1 consecutive bullish candle going up. So if we had 2, then that would have been valid. Hence why I will be looking for a break of structure on the 50-minute. 2 consecutive bullish candles, more than 2 consecutive bearish, and then minimum of 2 consecutive bullish candles again. Therefore, I will be looking for a break of structure on the 15-minute here. Make that as clear as can be. Alerts have already been set. So I'm looking for a break of structure here, which gives me not a bad risk to reward of almost a 6. So I'll almost be getting a 6 risk to reward here, but here is the catch. Context. We are bearish across the board here, with the exception of the weekly, which that's fine, but look at our higher time frame. We are in a confirmed Model 1 already, which has been spanning since, it's been going on since like the start of Jan. So we have not yet deviated this. If we deviate this then obviously becomes an invalid model. So I have put my alert there, but this is still a valid Model 1 going into an extended Model 2 with an extended tap, meaning you have tap 1, tap 2, tap 3, and an extended tap 4. Therefore, we can simply get rid of all this just to not confuse you guys. Therefore, given the higher time frame context, we can simply de-risk at the local range. So as soon as price hits here, we are risk off, and we just let this run to the range low. It's a very simple concept, but you just need to execute it based on the confirmations. Obviously, if there's no confirmations and we start moving up higher, eventually we deviate this, then all this becomes invalid. But this is all pre-planning, and pre-planning needs to be done. Then yeah, we extend this for a beautiful, which like some traders can only dream of this. You extend this to the range low, and that will net you a 80 risk to reward setup. That's the first. That is USD JPY. I'm not going to have this up here. I'll focus on that local 5 risk to reward setup, which is still a fantastic risk to reward. Like, just to get a 5 risk to reward on a trade is beautiful. But then this is just our signal to de-risk. So all I'll be doing is de-risking here, and then we let the rest run to the high time frame range low for that 80 risk to reward. Now, don't forget we have Asia lows below, so that's always a great liquidity target. And for now, all I'm doing is paying attention to that 15-minute low. And we can further draw our return to zone straight into that. Like, this is just beautiful. Straight into that 15-minute low. Boom. New York session has just started. We can expect a fast move down now, if we are to get it. If a market maker is stepping in, which is what I'm anticipating, is that we can expect this fast move down. So to summarize, we've got this high time frame range, very high time frame range. We're expecting an extended tap, and we're expecting to complete that local model and then flush down all the way to here, around that 152, 153 mark. Yeah, so this is USD JPY, and that is my pre-planning here. You're more than welcome to chart this up yourself on your own chart. And now we're just monitoring that market structure low. The other pair that I want to really emphasize, which looks fairly similar, or at least it did at the time, GBP JPY. So same thing, high time frame context. We have a confirmed model 1, tap 1, tap 2, tap 3, all higher than the previous. Return to zone, you can already see this is beautiful. Like, highs, highs, high lows, high lows, high lows, high lows, high lows, high lows. Like, these are all lows that have left behind liquidity, which is just eager to get swept. Now, from this extended, or from this model 1, we've got supply that's been left behind. What have we done? We've mitigated supply. We've even mitigated this refined supply. We do have even more refined supply at the top. That's not necessarily a given. We don't expect, price isn't going to get every single segment of refined supply. So that's there. That just kind of showcases our room for error. If price is going to go up, it's probably going to go up and mitigate this. But from here, after it's mitigated this, left behind some liquidity, grabbed the liquidity again, left supply in the process, we've now, so remember this, high time frame range, we've now created another low time frame range, or another range, which is now low time frame, and this is a model 2. Tap 1. Technically, I'm just looking at this as technically we've created like a carbon copy, or almost an exact copy of this high time frame range going into an extended tap. Model 1, each tap higher than the previous, left behind supply, prices come back to create some form of extended tap lower than the third tap. We zoom in, we've got a little mini version of this right here. Let's go back to the 45-minute. Tap 1, tap 2, tap 3, this we can count this as tap 3, all higher than the previous. What has it done? Left behind supply. And or extreme liquidity. Extreme liquidity is right there. There is extreme liquidity. What has price done? Come down, mitigated the demand, created a little bit more demand below, but we do have the Asia low, which, as we know, fantastic liquidity target. Now we have swept extreme liquidity, and we are simply waiting for a break of structure. At the time, we had a potential local range in here as well, which never got completed. Expectational order flow in here was simply, let's go here. All I was expecting price to do was boom, 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 mitigate this, break structure. That would have been my entry queue, and I would have let this absolutely run to the bottom of that high time frame range. Didn't happen. Same thing. We have to look at confirmations, not at our expectations. So therefore, this range becomes invalid. I'm not paying attention to this. This here, gone. Not interested in that. No longer interested in this. No longer interested in this return to zone. That also shows expectational order flow. We created some really nice lows, leaving behind a nice sell side liquidity. What did the market do? Sweep it. Whenever you see this, expect price to sweep it. Boom. Now what? This market structure low here, which was it was a 10-minute low, but I was actually monitoring, this was a 15-minute, yep. So I was monitoring this 15-minute low, which very similar story. Price just kept SFPing this. Failing to break, we come back up, failed to break again, came back up, failed to break again. Like even here, this candle is equal. It didn't close below this wick. So these all just failed breaks of structure. Nevertheless, I'm still waiting for us to close. If we can close below here, this is our market structure low. The second we close below this on the 15-minute, this for me is a valid break of structure. Otherwise, if we don't close below this and we continue going higher, the second we sweep this little high right there, I will circle it for you all. The second we sweep this high right here, I'm no longer looking to short unless we've gone over this second tap to create that model one. That, technically speaking, extended model one, where we look at these two as one singular tap. So it becomes something like that. Boom. That would be our break. That is the pre-planning here. So all I'm doing is waiting for either the break of structure here. If we break structure here, I am simply going to enter. I think we also have some supply up here. I can see it. Okay. Still valid 1 minute OBIF. I'm not putting that much emphasis on it, but it's there. Yeah, so pre-planning here is very simple. If we get the break here, that's all I need to short. If we don't break it, if we don't get the break, and the second we exceed this, I'm not looking to short the next break until we've swept this high. And then the same thing to the USD JPY. The second we get the confirmation, should we complete this range, I'm not going to take profit. I am simply de-risking and looking at the higher context at play. We are expecting to go lower. Therefore, this is to run to the range low for not as nice, but still a beautiful 22 risk to reward. That is the that's the planning there. Like it's pretty in depth, but it's also pretty in depth, but it is also quite simple if you break it down. Yeah, and then also this demand here is something I will monitor should we get the break. Um, yes, there is demand, but because we have Asia low right below, and as you know, Asia low is a fantastic magnet for price to go lower or higher, or if Asia high, magnet to go higher, Asia low, magnet to go lower. I'm only kind of expecting a brief bounce up and then continuation back down. So yeah, this is what I'm expecting, or what I'm pre-planning for with these JPY pairs. A lot of potential trade opportunities here. Just be patient. I emphasize it every single day. Just be patient, guys. Yeah, there's not much more to be said. Just be patient and we'll wait for our confirmations. And yeah, this is still at play. I'm just going to check to see if there's anything locally. No, nothing locally I'm interested in. But yeah, taking notes, guys. That's it for me. I will see you all on tomorrow's market update. Peace.